Right, everyone, here we are with another video with Invest for Tomorrow. And to all the first-time viewers and investors, welcome to the channel. And to all the subscribers, welcome back. All I ask for in return is for you to smash that like button to let me know you watch this video. It helps out the YouTube channel and it lets me know you appreciate the time and effort I put into making these videos. Now, as we jump into everything I'm going to discuss, I just want to make you guys aware that I have a Patreon and a Discord. By joining the Patreon, you gain access to both. The links are down below in the description, and I do daily briefings on stocks with momentum for you guys to train and learn to enter into stocks and find exit points as well until you finally feel comfortable to take positions on these great opportunities that give anywhere from 5 to 10% on a bad day, and on a good day 10 to 20%, and on a great day that's a home run like I like to call it, 20% beyond. So that is one thing you can gain access to, and not only that, but a great community of intelligent and smart investors all learning and growing together. And it's so much easier to have different sets of eyes looking at different sectors because you can't catch everything at the same time by yourself, and that's what the community is all about. So if that's something you're interested in, we're looking forward to have you join us. The links are down below, and the tiers are filling up pretty quickly. So the S&P 500 index, right? It finally pulled back a little bit more significant than it has in a while, right? We haven't seen it pull back like this since March 25th. It's had little pullbacks, but this is a pretty significant pullback compared to any of these little ones, right? Now, the question is, what made it pull back? Well, number one, the first thing out of all of it is it needed to cool off just by indicators. Like I made a video the other day, it kept running, and there's articles coming out on how to buy puts. I mean, on the SPY. Like that's just, I found that very interesting. And it's not really telling you how to buy puts or what to buy. It just tells you an overview of why puts on the SPY work or what it does and so forth. So that's a big thing. The second thing, I've noticed high volume in puts. Like if you go through the puts like months out from now and you go through the different option contracts that are available, you'll see that. You know, there's some more near term, there's some long term, and that's risky because you're betting against the overall market. And sometimes, you know, if it's too close, it won't give you enough time to make, you know, a decision. And sometimes those puts are very risky. So I'm not here giving financial advice. I'm not hinting to you guys, oh, you know, go check out puts. No. I'm just going based off of what that article said. We kept running since. And then we pulled back now. And why are we pulling back? Well, like I said, the indicators, that article was interesting. There's high volume in puts, so there's something going on that others don't really pay attention to, or others are paying attention to and we're not. Somebody knows something that we don't, right? Basically is what I meant to say. And these large firms, if there's high volume, they know something or they're going to try to pull it down themselves, right? Now, the treasury yield. Right, it's been cooling off, but it's had spikes and then comes back down, spikes and then comes back down, spikes and then comes back down, and now we're spiking. So it's cooled off pretty well, and we finally hit numbers from way back here towards the end of March, kind of around that area, and now we're actually spiking up a little bit. So I have a feeling that if this continues to spike up pretty fast, faster than expected, then this could have an impact overall on the market, because yesterday it fell tremendously, right, to the lows here of today, and then it jumped up again. So if this seems to have been the most recent low, we're bound to see this spike up and run up again and break through 1.51, hit newer highs, and take itself to points that we have not seen in a few days and even weeks. I mean, look at this chart here. So if this spike happens and continues to happen pretty fast, it's going to shock the market. I don't know for how long, but it's interesting. This disconnection that I talked about happened for a while, right? And now it's almost seeming like it's appearing again. So this is something we don't want to forget about. This is something we want to watch, and this is something we want to be aware of. But when you look at it in the micro perspective, right, on the day and then the 5 day, it seems like we're going downwards. But if this continues to pull upwards a little bit and hits 1.65 and then goes back up to 1.67, things are starting to look like a spike. And that spike is going to do this downward trend, right? So we want to watch this carefully. There's two ways this can play out, and we want to be aware of it, right? So the first thing is the S&P 500 is actually pulling downwards, and it can continue slowly with these spikes of the treasury yield and also just a lot of selling pressure and the fact that these puts are being executed and there's high volumes of them and the shorting has begun. Because remember, the SPY could be shorted, and not only that, but also individual stocks within the S&P 500 pulling down the S&P 500, right? So those are all the things you want to think about. I mean, we hit all-time highs here, and that was a big jump. A lot of people say that we have not recovered. When we pulled back here from 3,900 to 37, yes, portfolios have not recovered, and I agree with that. And if you agree with that, you can comment down below how much of your portfolio has not recovered. I'm sure it's a big portion of it, or a piece of it at least, because we all have a piece of those stocks that haven't recovered. Yet the S&P 500 has hit new all-time highs and ran from 3,700 to 4,100. That's a big jump. That's a recovery right there for sure. But now we're pulling back. And people don't want to call this a recovery because they don't see it reflect in the stocks they like. They don't see it reflect in their portfolio. And I've made videos telling you guys why there's a disconnect with your portfolio and the overall market and what stocks are running and which ones aren't. I talked about that. So this can continue possibly pulling back. That's one scenario. The second scenario is the fact that this pulls back, slingshots up, and can possibly hit closer to 4,200 or 4,200 and some change. And then the real correction starts. And we're going to pull back possibly 100 points, 200, worst case scenario 300. And if we go past 300, things are getting a little more interesting. And we'll have to see how bad the treasury yields are, how bad inflation is looking, how bad everything is looking, right? So a lot of things too that I've learned about the stock market is the stock market runs on anticipation. It doesn't run on the actual physical situation. It runs on anticipation. So all of this had to do with the anticipation of reopening plays, even down here, right? All the way around. Let's connect it. All of this has to do with the reopening anticipation. The fact that reopening is getting here close and soon, it's pulling back. There's some money getting taken off the table. Now, I'm not saying it won't slingshot up. That's a possibility after the pullback, but it can continue going downwards, and that's the worst case scenario because there's no more reopening plays. There's no more anticipation, and now we got to focus on earnings. Real hard-earned cash, right? Earnings and net profits and real valuations of companies. I've been saying this. I've been saying this over and over again since way back here, okay? I want you guys to be aware of that, and that's why there's a disconnect from your portfolio to the stock market. If you want to know what stocks to watch weekly to start building a portfolio that can get you closer to the green or on your way to the green, you can join me at the Patreon with the other members, and there's a full list of stocks already, and weekly I'm going to have different stock opportunities. Some are going to be swing trade opportunities. Some are going to be long-term. That's up to you to decide how you want to handle it after doing your research, but I'm here, like I always say, I'm the pitcher, throw the baseballs at you, you guys are the batters and the swingers with your bats, and once I throw and pitch that ball at you, you guys swing, you guys are the all-stars, you guys hit the home runs. So if that's something that interests you, the links are down below, and you need to start preparing for this new market. You know, we're not in the 2020 market. We're in a whole new market, and it's not really new. It's what the market always has been, but we call it new because we're transitioning from what we got used to for the last year and a half till now. Portfolio to maximize profits and minimize losses, join us, and we're here. That's what we do here in Invest for Tomorrow. In the community, we got some great smart investors over at the Discord, and we discuss stocks every single day. As always, guys, thank you guys so much for watching, and let's make some money.